Let's talk earnings ahead. Getting ready for Palantir. Alex Karp, the Next Gen Investing host, joins us this morning to take a look at the stock. It feels like this just became a really important one, Alex. It's always been a favorite among traders. I joked before how many folks I know personally that love to trade Palantir. But given last week's sell-off in cloud companies, it seems this might have a little bit more impact than just for some of the tech traders.
Maybe from a sentiment standpoint, I would say that is a little bit of a stretch, though, Oliver. Just from a market cap standpoint, this one's nowhere near some of the big names that we saw last week. But the ominously named surveillance company, hat tip Rick Ducapra was reminding us that it gets its name from the Lord of the Rings and sort of that all-seeing object that they look into in that in the novel and the movies for Lord of the Rings. But a lot of volatility priced in, as would be expected for this name. That might have a little bit to do with why it's such a popularly traded name. And with that, Oliver, 173% implied volatility, 13.5% is the implied move for that particular name. Looking at the EPS and revenue estimates, you're looking at 5 cents for the EPS. The revenue estimate is just north of $500 million, 533.88 million. Year to date, the stock is up 183.5%, so it really has a pretty impressive rally thus far. Forward PE at 77 is pretty impressive when you consider the fact that even for this name, that is a 15% premium over its 2-year average, which is a 67 or so forward PE. Analysts are a little mixed though right now, Oliver. 40% or so are on sell. 33% or about a third are on hold, and only about 1/5 of analysts have buy on this. The Bloomberg 12-month target price consensus is at $12. Currently, the stock's almost 18, so it does imply quite a bit of downside.
The fact that this is expensive by its own standards and it's trading below $20 still, I think really puts in perspective the valuation kind of frothing that's happened in this sector over the last couple months. Because don't forget, it traded $45, but the fact that we're still expensive on Palantir's historical basis is pretty wild.
No doubt about it, and I think that that's the most impressive thing, because when you look at the actual kind of company itself, there is an expectation that the government side will be, buoyed by some recent contracts that had been signed with the U.S. government. But from the commercial standpoint, the expansion is likely to be threatened by longer sales cycles, as well as enterprise IT spending being prioritized into things like infrastructure as opposed to this type of big data surveillance. So that's something to watch, as this is a company that doesn't have a subscription-based model at this point. So they're spending a lot of money to acquire new customers. They don't have that big customer base yet where they're just trying to recurringly monetize them. So margins will be in question here, of course, but also I'm going to be watching that commercial side of the business. We kind of know the government side will be okay. The commercial side is the issue.
Okay, for sure. Should be a fun report. Pressure's on to live up to the now valuation expectations that have been built in. Thanks, Alex, for the preview.